How's it going, everybody? Tristan Powell here. Today in this video we're going to be talking about the stock market. Surprise, surprise. But more specifically, stock market movement in general for the short term and the long term. So lately I've seen a lot of comments in the investing communities that I'm part of saying, "Oh, don't buy right now. Yeah, we're gonna test the bottoms. We're gonna go down again. This is a dead cat bounce. This is a bull trap." So I think we all need to take a big step back, breathe, and be calm and collective about this. So here's a little example from history. Back in 2009, the market was in crisis, but then it started rallying. It kept going higher. The media at the time were still calling for the end of the world. This is the end. This is it. It's going back down. This is a double bottom. This is recession part 2. Little did they know that was the beginning of the longest bull market in history. Even in 2010, when it was apparent that the economy had recovered and things were going back to normal, the media was still calling for another recession right after. So you gotta draw conclusions and similarities from the past and today. Nobody knows if the market's going up, down, or sideways, or circles. No one knows. And please understand, I'm not saying that every crash is the same. I'm not saying that we're recovering and we're going to new highs. This is it. We're all good. No, I'm not saying that either. But what I'm trying to say is investors shouldn't bother themselves with short-term movements in the market. So Barry Schwartz from Baskin Wealth Management posted on Twitter the other day something really good. It was 4 questions that investors have to ask themselves when it comes to investing. I'm not being sponsored by them, by the way. I just thought it was a really good thing they posted. Number 1, do you believe that the company has the ability to grow earnings over the long term? The long term. Number 2, can you buy these companies at reasonable valuations? So in another way of saying that is the share price too expensive for what the company is? This a recent example of this before COVID all happened was that Shopify had Shopify, the stock I always talk about. Shopify had a really expensive valuation for what it was. So it's not always a good idea to buy companies with super high valuations. Number 3, do we believe this company will have the ability to reinvest the future cash flows and get an above average rate of return? A little bit of an explanation into that is companies reinvest their money. There is no Scrooge McDuck vault where they go and swim in after work. No. They reinvest their money into their company to get future return. So are they going to get a good return on the money they invest into themselves? Number 4, do you believe that this company, when compared to other assets, will give you a better return? It's like saying, do you think you're going to get a better return investing in an ETF, an index fund, a different company's stock, bonds, etc.? Do you believe that you have a good chance of getting a better return with this than everything else? It doesn't really matter what happens in the short term, as long as you're thinking long term. I invest in a strategy called dollar cost averaging. So what dollar cost averaging is you invest the same amount of money every given time period. Me, it's every week. Once a week, I invest the same amount of money once every single week. Doesn't matter if the stock market is deemed at a high, a low, somewhere in the middle, doesn't matter. I buy once every week. So as long as I'm playing the long game and I don't get emotionally connected to what's happening in the market, I will come out okay in the long run. So this chart here is my own little diagram of the stock market, the S&P 500, Dow, whatever you want, over a long term. If I buy here, here, I buy here, I buy here, I buy here, I buy here, 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 here. You get the picture. In the long run, I come out okay. So, for the record, I have no clue what the stock market is going to do in the short term. I think we're going to see a lot of this, a lot of volatility, which means, a lot of highs, lows, lots of high percentage point movements. Another thing should be said about comparing this crash to other stock market crashes. In 1929, the beginning of the Great Depression, and in 2008, the beginning of the financial crisis, the economies were beaten to death. It was a bad time. Unemployment was high. This crash is a little bit different. Everyone's out of a job. Nobody's working, except the essential workers that the government deems essential. Big thanks to healthcare workers, by the way. Really appreciate everything you do. You put your life on the line. It's awesome. You guys are the best. The Bank of Canada highlighted today that this is unsustainable. It doesn't matter how big the check the Bank of Canada or the Federal Reserve writes. If there's no economic activity, people aren't leaving their homes, this can cause huge damage and could be permanent. But it's not all doom and gloom. You can't get your head wrapped around in the doom and gloom. Ottawa and the White House have recently said that they're going to slowly start reopening things. The financial system is still solvent. It didn't collapse. And the jobs, compared to other crises where the jobs actually disappeared, they're gone, those jobs died. In this crisis, those jobs are right there waiting for you. They're waiting for you to go back to work. When we can take Europe, for example, they're cautiously reopening. They're coming out of quarantine. Austria and Italy have actually started reopening shops. And China, who got the coronavirus right off the bat, they are reopening too. People are going to work. They come home. The entertainment and hospitality industry in China, however, has not come back the same. I do believe it will come back, just a little bit slower than the rest. People need to be comfortable with it again. So keep your head up. This isn't the end of the world. Got to think long term. This is it for this video, because this is already going to be a long one. But I really want to get something across in this video. Yes, it's all doom and gloom, but that's just in the short term. You got to think long term. Sometimes you have to suffer a little bit in the short term to have long-term happiness. The same type of happiness I get when you smash that like button. And remember to subscribe. Also, I'm thinking about doing some live streams at the end of the market, at the end of the stock market hours every single day. Tell me what you would think of that. Leave it in the comments below. And as always, stay happy, stay healthy, and good luck investing. See you in the next video. The truth.